This is how we do it. This is how we do it.
So for anybody who doesn't know, what is a mortgage and how does it work?
So a mortgage is a loan to buy a property. It is secured against that property. So if you want to buy a house, the bank says, yes, that's great. You've got a job, you can afford to buy the house, but if you don't pay us our money back, we have the right to take that house off you, to repossess that house. That makes the bank safer, and therefore they can give you a low interest rate because it's low risk.
Yeah. So I asked over on Instagram for you guys to send over some questions, so we're going to go through those now. Do you need to get a mortgage if you have enough cash to buy an investment property? If a property costs 70k and you want to buy and refurbish it, is it profitable to get a mortgage on it if you're planning to buy other investment properties too? I guess what I'm trying to ask is, are mortgages necessary / a good thing for investors, or should you avoid mortgages if you can?
It's a very interesting question, that. So what we're talking about is, should I use debt? So I just get the camera.
It's fine.
should I use debt? And you use debt because it's like a lever. It's like, if there's a difficult door to open, you get a crowbar and you wedge it open. That's why bankers talk about leverage.
Yeah.
It's, if you're making a good bet, generally that lever is going to increase the amount of return you get, and it's the same thing with property.
Yeah.
So okay, you're buying a house, 70,000. You've got your money for the works. You've got money for the stamp duty and all the rest. If you're in a position to own a property in cash, good for you.
Yeah.
You might want to hold on to that, but it depends on what your ambitions are. If you want to be able to then take your money out of that house and buy another one, then let's say you've got £100,000 total. It might be the difference between you owning 3 and 1 house.
Yeah.
And 3 houses or 1. So it's all down to context. Should you use a lever to expand what you're doing, or should you not? I won't say whether it's more profitable or not, because I can't.
Yeah.
But most people do decide to do that because it enables them to have more houses,
Yeah, so it's like if you had 100k, you could potentially use that as 4 deposits.
Exactly.
It's 25 grand each.
Exactly. Yeah.
So it's what you want to do.
It depends on what is your profit margin on that individual house.
Yeah.
And is it worth it? It probably is. But
Yeah.
I wouldn't want to open myself up to liability and say
say.
But it's the downside of using debt is it increases your risk.
Yeah.
There is a bank there that has a say over the property and has got a charge if you for any reason can't pay that mortgage. Whereas if you own it for cash and it's sitting empty, the only person who loses out is you, because you're not getting rent.
Yeah.
So I'd never talk anybody into debt, but it depends on what your ambitions are.
Yeah.
And if your ambitions are to grow, then great. I've got an uncle who's in a lucky position, who has a number of properties paid off, and he's not going to change that, and good for him.
Yeah.
But he's at the end of his life, not the end of his life. Hope it's not the end of his life. He's towards the end of his life, and good for him. People who are looking to expand and grow, generally they've got to use debt to get there.
Yeah. Cool. Good question. What would you recommend for someone wanting to purchase a bigger home in the current climate?
Can you afford it? Can you afford it? The current climate, we are in the lowest interest rate environment we've ever been in. When I started working in 2006, interest rates were about 5%. You can get and there was a lot of competition. The good stuff. I remember really cheap rate was about 3.5%. Now you can get 2%. If it's low loan to value, 1.24%. I saw the other day. Things change over time.
Yeah.
So is it okay? You've got to check. Is it okay for me now? Is it going to be okay for me in 10 years' time if the interest rates jump up to 5%? Is it going to be okay for me if I'm out of work? Do I need if I'm self-employed? Do I need insurance to cover me if I'm ill?
Yeah.
So it's nice to buy a bigger house, and I think you can go ahead and do it.
Yeah.
But be careful, because anybody who's been around for a while knows from experience that things change and things don't almost never run to plan.
Yeah.
So I think just get good advice.
Yeah.
Really, get somebody decent, and then you haven't got to worry about these other elements.
No. Next question. How can I get a mortgage on buy-to-let or buy-to-serviced accommodation using a limited company? What are the requirements?
So there are now a number of lenders who will deal with limited company purchases. They see it as the limited companies buying, but they do two levels of underwriting. They'll check the limited company itself, and they'll check you out as well.
Yeah.
So yes, it's a limited company, but they know that you own a limited company, so they know they'll lend it to you through the LLC. You can do it in a few situations now. You need to have a form of income on your own. There are some lenders who have you need to have an employed income, a wage of some kind. You don't necessarily have to have a certain amount of that wage. There is a lender who'll do limited company buy-to-let and limited company serviced accommodation, or short-let, with no minimum income. It's been going for a while now, so it's quite similar to standard mortgage process. But again, I'd say get somebody decent to have a look at it. Make sure you've got a good solicitor who can explain what your responsibilities are as the owner of that limited company. But I think talk to an advisor.
Yeah. Next question. What to do if you have a bad credit score and you want to buy a house?
So the first thing to do is to download your credit report, the PDF document. Don't look at the score. Well, do look at the score. Sometimes I change my mind mid-sentence. Do look at the score, but it's not the most important thing, because banks have their own version of that score. And that number that you get is often it's used by loan companies and credit card companies mostly.
Yeah.
What's important is, are there missed payments on that report? Have you missed a utility bill 2 years ago? Payday loans are a big one. But have a look at the report and see what information is on it first. My personal preferred agency, there's a firm called Check My File, and they go across, they have one document and they check all the information across 3 credit agencies, so you can see what's there. And then that will tell you, an advisor, or you can do your own research, that will give you an idea of what your options are with a mortgage.
Yeah.
You can usually I can place people with bad credit.
Yeah.
It's not a problem. It's a question of cost. If there is a missed payment or a CCJ, your interest rate might be a bit higher than it would be if it wasn't.
Okay. And can they do things like, if they did like a joint venture, if they were partnered with someone with really good credit, does that kind of balance it out?
Unfortunately, it doesn't.
Oh, really?
No, unfortunately, it doesn't. It's that sort of situation can help with income.
Yeah.
If one person isn't earning enough to afford their house, then somebody comes in with them, then great. But with bad credit, there's not really much of a way around it, unfortunately. There isn't at present much of like a guarantor scheme going on. As there are, with unsecured loans, you can get a guarantor. Not really with mortgages.
Right.
I wonder if that'll change this year.
Yeah.
We don't know. It's one area. Maybe they'll bring out a product, but at the moment, no.
That's what I heard at some property training that I went to.
Well, I mean, they will look at it more kindly.
Yeah.
But they're not going to say, okay, we've got a criteria that says no CCJs within 2 years, and you've got a CCJ, or one of the applicants has got a CCJ, but there's 2 years, so it's okay. They won't do that. It might help it overall, but they're not going to change their policy.
Right.
If you've got missed payments within 3 months and they've got it says no missed payments within 3 months, we're not going to be able to work around that.
Yeah.
But if it's a kind of a borderline, an edge case, yeah, sure, but it might help. But I think it's a smaller effect than. But everybody's got an opinion, haven't they?
Yeah. Can you qualify for a mortgage at 19?
Yes.
You have to be 18, don't you?
Yeah.
Yeah.
And some lenders start at 20. Some lenders will start at 21. Some at 25. Depends on circumstance. But,
Yeah.
But yes.
What are your thoughts on online brokers?
Some are very good.
Mm-hmm.
There are some firms that are excellent. I think some of the new firms like Habito and Mojo are these kind of new tech-based brokers which are automated, and I think they have deservedly taken a lot of business out of the market for the kind of standard middle-of-the-road business. They're very good, and I think it's hard for somebody sitting in the back of an estate agency to compete with that, if I'm frank. I think that some online mortgage brokers are might be a one-man band, or they might be newer than they appear.
Right.
But I'm an online mortgage broker,
Okay.
and I think it's great. And most of my clients deal at a distance. Occasionally, I'll have a face-to-face meeting, but most people are happy at a distance. So I think it's great. It's the way forward. But it's the same as within you know, for physical mortgage brokers, three-dimensional mortgage brokers, is that some are good and some are bad.
Yeah.
I'd check out the reviews, check out the reputation. It will always, if you've got an unusual case, personal referral is the most tried and tested way. Having somebody you trust who can say, that guy's good, use him.
Yeah. So, what sort of trends are you seeing with first-time buyers?
They need a deposit off the parents.
Great.
Cheryl. Yeah, they struggle to find a deposit. Some people do, but it's most first-time buyers I see have got a 5 or 10% deposit because property prices are so high.
Yeah.
They're generally good customers, first-time buyers. They're generally pretty switched on.
Yeah.
And because it's so hard to buy a house nowadays, they're prepared to really get their life in good order to get that. So I really like dealing with first-time buyers.
Yeah.
But I think deposit is usually the main problem. Sometimes because house prices are high, sometimes earnings are at the limit of their affordability. But other than that, I don't have many problems with first-time buyers. I'm a fan.
Does it make a difference to use a free mortgage broker or one that charges a fee?
Have to be careful here. Some free mortgage brokers are very good.
Okay. And some aren't.
And I like to charge fees because I don't then have to take on too many clients, and I can give the right amount of effort to each client.
Yeah.
You can save some money by going to a free broker, and it depends on your situation, and if you're in a normal a zero fee broker, and if you're in a fairly standard situation, fair enough.
Yeah.
And you know, there are some genuinely good brokers who don't charge fees.
Yeah.
But I think personally, you get what you pay for.
Yeah. For sure.
It's also, with fees, it's a difficult thing, you know, because it's a lot of trust and it is a lot of money. And what people don't want is they don't want to pay fees up front to find out a month later that the person isn't as good as they seemed at the sales pitch.
Yeah.
You know, because people can come across well, and then you give them some money and you find out a month later they're not very good, but it's a bit too late because you're already halfway through a mortgage. But generally I'm pretty supportive of fees, and I think with solicitors as well, it's a mistake to try and get the cheapest solicitor, because there are some solicitor firms out there who are large and slow.
Yeah.
And it's like, you know, you might find yourself wishing you paid an extra £300 and had it done. We've all had that experience, I think.
Yeah. How easy is it to get a buy-to-let mortgage when you're on a minimum wage job and a first-time buyer?
Hard. First-time buyer, buy-to-let, yes, we can do it. With a low income is difficult because some of the first-time buy-to-let lenders will want to see that you can cover that mortgage from your wage if there isn't a tenant in there. But hard doesn't mean let's not do it. Hard means okay, we might need to look at other options and ways of doing this. So that's a devil in the detail case. That's a give us a call and find out.
One thing that I've always wondered, because I always hear people say about when you're self-employed, you've got to have like 3 years on the books. If you're going to a mortgage broker, is that still the case?
I can deal with people with 1 year's accounts, that's no problem.
So it doesn't always have to be 3 years.
It doesn't always have to be 3 years. And if you're a contractor and you've been in the same industry for a while, but let's say you were on a 6-month contract as an employee and you've just become self-employed 3 months ago, and you've got another couple of months on your current contract, but you're self-employed now, being paid £200 a day or something, there are lenders who'll say, okay, we'll lend to you. So in that version of self-employed, actually you don't even need a year, you need 3 months. But it depends on the ins and outs and the situation, as all these things do. 1 year's accounts, we can do that.
What percentage deposit is needed for a second home, and how do you get a deposit from your first home?
Minimum deposit is 5%. It depends on how much your first home is worth, how much you can get out of there, and it depends on how much you're earning and what your mortgage is. But you need 5% and as a minimum. Deposit is the one part that's really the hardest to get around because, and the reason is house prices move a lot over time. If you look at a graph of how house prices have moved, that line does go up and down quite a lot. Interestingly, rents are a bit more stable because people always need to live somewhere. So it's for that reason that lenders insist on a deposit, and the chances that a house drops in value by 5% are there is a reasonable chance that will happen over 10 and 20 years. You know, if there's a recession, the chances that house drops by 10% are a bit lower. The chances it drops by 20% are a lot lower. So that's why you have to pay a higher interest rate with a low deposit. And as it comes down, you can see it gets lower and lower and lower. So it's better to not stretch yourself too far if you have to, but it comes back to how much leverage, how much of a lever do you want to use here, how much debt do you want to employ, and is it sensible? So 5%, but depends on the details. And if you can do it, should you do it? Because you might decide to wait 6 months and get 10%.
Tips for first-time buyers regarding getting ready to apply for a mortgage?
Don't worry. Feel free to ask questions. You're not going to say anything wrong. Nobody's going to try and catch you out. Just call up people who know what they're talking about and ask them. Say, what should I do? And they'll tell you. We're here to help. We get paid from helping, and the banks also get paid from helping. I would recommend speaking to an advisor. Usually they'll talk to you for free on the off chance they might get some business from you, but it's no obligation. I speak to people for free all the time. So just pick up the phone and don't worry. Sometimes people go down the path and think a lot and prepare a lot, but sometimes you might be over preparing in ways you don't realise. So just ask, it's fine.
Just find out. So I don't know if you're allowed to say, but like, what's the most challenging case you've managed to get a mortgage for? Okay,
I can't give a location. I did a large 14-bedroom HMO that was 3 self-contained flats on the ground floor and an 8-bed HMO on top of it. One of the rooms was a studio room that was less than 30 square meters, so that's a problem. It was a lot, and we did, and first-time landlord, which I can't believe we actually did it, but we did do that. I was very proud of that one. That was a big win.
This is like just me asking now.
Go on.
Is it true that you can't get a mortgage if a property has got 2 kitchens?
It depends what. For some lenders, yes, that is true. I think that's probably broadly true, but it's if you're dealing with more specialist HMO lenders or commercial lenders, then you'll be okay because they deal with all types really.
Yeah. All these little things that I heard, and I never know if they're true or not.
Well, that's the thing is things are sometimes true 90% of the time.
Yeah.
But if you're able to access that 10% that's left over, that's maybe where there's a bit of opportunity.
Yeah.
You know, if you're the one person out of 10 who's looking at and the estate agent thinks, oh, we won't be able to get a mortgage on this. If you're the one person out of 10 who can get a mortgage on that, then you might not need to buy it with cash and you might make more money.
Yeah. So recently, me and Mom got a down valuation.
Yeah.
Why is this happening to people?
That's a big question. I mean, valuers are well trained, but they have to see a lot of properties in a day. They don't always get it right.
Yeah.
To be frank, I've had properties where you've had a valuer visit, one valuer from one lender comes out and down values it by 10%, and the next valuer comes out 2 weeks later and values it the same. I had that last year, and the difference between those two numbers was about £40,000.
Wow.
That's not the worst example. There's a broker I know who's had a large value property that was worth about 1.8 million and it came back at 1.1. So it happens a lot. Wow. And the reason is it's hard to value a property. It's actually a really hard job. Yeah. Every property is different. You have to train for years and it still takes a lot of skill to get there. So it's one of the hardest parts of the process, and it's the least easy to control. One of the good things is that there's been a lot of uncertainty in the market with Brexit and with the election, and sorry to mention the B word, but that's made people careful the past couple of years. Yeah. The valuers want to go, okay, well, what if there is a house price crash after Brexit? We at least know now where we stand, and I think there's a little bit less risk there now. But that's not a professional opinion, that's just me and my gut. That's what my gut says.
So hypothetically, say if you're like 16 years old and for whatever reason you've got a deposit for a property, are you allowed to use sort of like a mortgage host and put someone else on it?
No. So mortgage host is a phrase I hear that I think generally what people mean is I can't get a mortgage because of my situation, so I'm going to get my family member or friend to get it, and we'll have some sort of arrangement where I'm living in it. Yeah. It's not something I would deal with personally. There's regulation that covers that. If you want to do a joint application, you know, you might be in a situation where you can't afford the mortgage, or some of your credit is bad, and having a joint application will help boost the profile of the case. That's okay. There are mortgages, there's a kind of mortgage now, joint name sole proprietor mortgages, where there's 2 people on the mortgage, but actually there's one person who owns the property. Right. So if you wanted to buy a property, but you didn't have enough money, you weren't earning enough, but you had a parent who was, you could do a joint application and you would still just be the sole owner of that property. Right. And that's okay, because that's sort of, you know, we're being nice and upfront and straightforward and saying this is the situation. I'm okay with that, it's no problem. What I wouldn't be okay with is trying to find a workaround the criteria by doing a deal behind the scenes. Yeah. I think it might feel like a good idea in the short term. It might work for the next year or two, but if your relationship breaks down with that person, or let's say that person becomes ill, you might find yourself in trouble. I would stay pretty far away from that.
Yeah, it's just a bit risky. It's a lot of trust.
It's a lot of trust, and you don't know. It's hard to predict what's going to happen.
Yeah.
Things happen that you don't expect, and you can't. You might think you've accounted for everything, but things happen that have never happened before and will never happen again. So you can't. It feels a bit complex to me, and I would work towards getting yourself in a position where you can do it on your own.
Yeah.
And you can do that. So. do that.
Cool. So guys, I hope you enjoyed the Q&A with Edward. Thank you so much for answering all the questions.
Thank you for having me.
And if people need to contact you, where do they go?
My website is upliftfinance.co.uk. Contact details are on there.
But thank you so much for watching. Really appreciate it as always, and I'll see you next time. Bye.